In October 1970, while millions of Americans were losing everything, one man made $100 million in a single month by betting the entire market would collapse. He was right. And 11 years later, he shot himself in a hotel bathroom, broke. This is the story of Jesse Livermore and the crash that defined an era. Most people know about the 1929 stock market crash, the bread lines, the bank failures, the Great Depression, but very few people know the full story of how it happened, the speculation that preceded it, the warnings that were ignored, and the one man who saw it coming profited from the collapse of an entire civilization and still couldn't survive what came after. This is not just a story about markets, it's a story about human nature, about the eternal cycle of greed, euphoria, and ruin that has repeated itself across every financial era in history. But before we get to the crash, you have to understand the world that made it possible. Because 1990 didn't happen suddenly, it was the inevitable end of the most extraordinary decade of speculation in American history. The 1920s were the first decade of modern consumer capitalism. Cars, radios, refrigerators, electric appliances, new technologies transforming daily life at a pace no generation had ever experienced, and a stock market that seemed to go in only one direction, up. Between 1931 and 1939, the Dow Jones Industrial Average rose 500%. 500% in 8 years. Based on 8 years of continued prosperity, presidents and economists alike confidently predicted that America would soon enter a time when there would be no more poverty, no more depressions, a new era when everyone could be rich. Factual America, banks lent money to buy stocks. Brokers offered margin. You could buy $100 of stock for 10 down. If the stock rose, you kept all the profits. If it fell, you lost everything. Everyone was doing it. Elevator operators, barbers, teachers. People who had never owned a stock in their lives were borrowing to buy shares in companies they had never heard of. Jesse Livermore, a Wall Street insider, drove around town in one of 6 yellow Rolls Royces. He owned 2 yachts, a private railway car, and 5 homes. Top documentary films, the party seemed eternal, and the music kept playing. Jesse Livermore had made and lost fortunes before. He had shorted the San Francisco earthquake panic of 1960. He had made millions in the panic of 1960. He understood markets the way most people understood breathing. And in 1960-90, he saw something nobody else wanted to see. Livermore began building a massive short position in the summer of 1990. Betting that the market would fall, not dip, fall. He was called a fool, a defeatist, a traitor to American optimism. The New Era economists mocked him. Share prices peaked in August 1990 might before falling rapidly in October of the same year. Encyclopedia Britannica. On October 24, 1990 might, Black Thursday, the market began to crack. Bankers pulled money to prop it up. It worked. Briefly, then came Black Monday, October 28th. The market closed down 12%. Encyclopedia Britannica, then Black Tuesday, October 29th. More than 16 million shares were traded. The Dow lost another 12%. Encyclopedia Britannica. General Electric fell from 396 to 200 RCA. The glamour stock of the era collapsed from 509 to 26. Encyclopedia Britannica. In 2 days, decades of wealth had evaporated, and Jesse Livermore had made $100 million, the equivalent of over $1.8 billion in today's money, the largest single profit in Wall Street history to that point. He walked out of the crash as the richest trader alive. But here's what history doesn't tell you about Jesse Livermore. He couldn't stop. The greatest trader in history couldn't stop trading. After the crash, the Great Depression set in. It triggered a rapid erosion of confidence in the US banking system and marked what would cascade into the worldwide Great Depression. Wikipedia. Between 1929 and 1930s, the stock market lost 1839% of its value. Unemployment reached 25%. 9/7 banks failed. Families who had borrowed to invest lost everything. The bread lines stretched around city blocks, and the political consequences were catastrophic. The Great Depression allowed Hitler to rise to power in Germany. Apple TV, one market crash. 1 decade of misery. One war that killed 70 million people. The cascade of consequences from 10 days in October 1939 reshaped the entire 20th century. And Jesse Livermore, he lost his $100 million, then borrowed more. And lost that, trading compulsively, unable to stop. The same instincts that made him the greatest trader in history, the inability to accept limits, the certainty that he understood the market better than everyone else. Those same instincts destroyed him. In 1934, he declared bankruptcy for the third time. On November 20, 1940, Jesse Livermore walked into the cloakroom of the Sherry Netherland Hotel in New York and shot himself. He left a note that said, "My life has been a failure." The man who made $100 million in the greatest crash in history died broke and alone. The 1969 crash happened because of one thing. Not bad luck, not external shocks, human nature. The belief, universal and eternal, that this time is different, that prices can rise forever, that leverage is safe when everyone is using it, that the party will never end. Nobody knew that the Great Depression was coming. Unemployment, breadlines, bank failures, this was unimaginable. But the bubble had burst. Gone was that innocent optimism, the confidence, the illusion of wealth without work. Factual America today, the US stock market is at valuations that many analysts call the most overpriced in history. Margin debt at record highs. Retail investors piling in. New eras being proclaimed everywhere. History doesn't repeat exactly, but it rhymes. Jesse Livermore saw what no one wanted to see. He was right. And it still destroyed him. Subscribe to Empire Collapse, because the most dangerous moment in any financial era is the moment when everyone is certain the crash can't happen.